please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Now on to a CNBC TV18 exclusive. Then former chief economist of the World Bank and the former chief economic advisor Kaushik Basu says India's improvement in ease of doing business was partly because of its own efforts and partly because of the rejig in the ease of doing business index. Speaking to Lata Venkatesh, he adds the rupee needs to be between 71 and 72 to give some space for exports to grow.
India has indeed improved. Not quite as much as appeared straight away in terms of numbers. Part of that is India's own move. Part of that is changing measures of the World Bank. Okay. So the 30 places that India moved, part of that was because India had made improvements. Part of that is because World Bank had changed certain ways of calculations which went in the favor of India. So it's a combination. Okay. Having said that, even before I went to the World Bank, when I was in the Indian government, I would always stress that this is an indicator worth watching. Yes. And India should try to do better on that, because Indian bureaucratic processes are so slow and cumbersome, it slows down the economy. So I have to say, on that score, it is good to see India moving in the correct direction.
Okay. Can you tell us what percentage was because of India and what percentage was because the index itself changed?
Of the 30, more than half the movement was changes in what the World Bank had done. Okay. Less than half was because of India's move. So I don't know the exact, I won't put down my word for it because I was not at the World Bank then. Okay. But I do know that India went a substantial way in that, but more than half was because of changes in the criteria.
Dr. Basu, this bankruptcy code, which has given us this big jump in ease of doing business, do you think it will succeed? Because its previous avatars, the Sarfacy Act in 2003 and the DRT Act, Debt Recovery Tribunal Act in 1993, didn't meet with much success.
Yeah. India has had a bit of a record of trying to do things and not managing. But this is of recent policies. I believe actually this is one of the best moves that the government of India has done, the bankruptcy code. I don't know the details of it, but from the little bit I've seen, and I feel the intentions are right. One measure, doing business is a variety of measures. One particular measure on which India does atrociously is how long it takes to close a business. Okay. In India, it's just awful. I mean, to go through the bankruptcy procedures, it's much worse than other countries. And we do know that people are sensible enough. If you know that you can't get out of a business once you've got in, you'll hesitate to go in the first place. So very important part of the doing business. And I was glad when India took this measure. And I had spoken to some people in government, and the way it was being done was right, to sort of ease up, make it easier. Yes, you'll have to take some losses, but have some rules who takes how much losses, the borrower, the lender, the equity holder, and have clean rules so that you can exit quick.
Are you sufficiently satisfied from your perch that we will move up further in the ease of doing business because of the bankruptcy?
I would think so. Okay. Because of this, and because the space for improvement is huge, because we did very badly.
They're so bad,
Yes, I would expect India to move up more on that. But one thing, Lata, I should tell you straight away. A country is 1,000 different things happening in business. Doing business measures 10 different indicators. We must not get into the ditch of just gaming this system. Okay. Some countries have done that. You work on exactly the 10 measures that the World Bank is doing, but what you have to do is take it in the spirit that the aim of this is to ease up bureaucratic procedures, and measures have been taken on this, and I hope that that will be the spirit to do it.
One of the things that has changed lately is the Prevention of Corruption Act has been amended about a couple of weeks back. And one of the things it says is that both the bribe giver and the bribe taker will be culpable and can be brought to book. Is India moving in the right pace, right direction?
I don't think so really on this measure. My own view was that this is something that I had aired when I was in government. It was never really taken on board, is to actually, in cases where the bribe giver is being forced to give a bribe, is being harassed. It's a harassment bribe. There should be no punishment for the bribe giver. The rupee has got stronger in real terms. There's been some correction over the last few months, we know that, but not enough of a correction. And the strengthening of the rupee means that exports are being hurt globally. This is my own back of the envelope calculation, I would expect something like 70, 71 rupees to the dollar to be where it should rest, which is going to give the space for our producers to get in competitively in the world market. That has not happened. A planned intervention, which is a correction. It's not a depreciation really, it's a correction for the fact that there has been real appreciation over several years. That correction should be done in a very managed way instead of having the market run away and do that. So that would be my recommendation. If I was sitting in government, I would have sat with policymakers and said that make that small correction. That's a boost that our manufacturing sector, the export sector needs.
Okay. Well, there are 2 or 3 questions I want to ask you on this. There appears to be a belief in government that actually a strong currency is a sign of a strong economy. I mean, obviously I've not tested this with actual sources, but there are people who tell me that the government doesn't want to see 70 to the dollar before elections because that's scary. That looks like India is weak.
Yeah.
Do you think this is ill-informed advice?
Yes, I would think so if that is the view, because, you know, the world over countries are fighting to get weaker currencies. From United States through China to Switzerland, they want that because of the export market. So trying to sort of symbolically hold it higher does not really make sense. So yes, if that's the spirit in which it's being done, I don't think that is quite correct.
Okay, so rupee depreciation not really a sign of worries. That's the word coming in from Mr. Basu. But it is time now for a short break. Up next, M&M and TVS Motors as well as Motherson Sumi will report.
Now let's shift focus to earnings. Adani Ports reported their first quarter numbers yesterday post-markets. The numbers, Anisha, they seemed weaker than expected?
Well, yes, if you look at the reported numbers, they look weaker than our expectations. But let's remember that the numbers are not really comparable to the poll because there is no SEC income this time. And that is why the numbers look bit weak. But if you look at the operational performance, that is not all that bad. Now, to just run you through the numbers, the revenue came in at around 2,400 odd crores. The margin was at around 50% and the net profit declined by around 9% to come in at 690 crores versus an expectation of a profit of around 850 crores. Now, there are a couple of pointers to note here because there was a SEC income of 700 crores last year, which was not there this time. So if you strip off the SEC income, the revenue is up around 16% on a like-to-like basis. The EBITDA is up 23% and the margin is healthy at around 66%. Also, in terms of the bottom line, the numbers look off our poll by around 350 crores because there was a forex loss of around 382 crores that the company had to book versus a gain that was there last year. The tax, however, was lower and supported the bottom line a tad bit. But in terms of the operational performance, the cargo volume was decent. Now that grew around 9% year on year, came in at 48 million tons. The crude is what really supported the volumes because that one grew by 65%, and the double-digit volume growth that we're seeing in containers continues to grow because that came in at 16%. In terms of the ports as well, Mundra Port, as was largely expected, gave a single-digit growth. Hazira grew by 14% and the Kattupalli Port acquisition, which has been completed, grew by around 13%. What brokerages are saying, Macquarie, for example, says the core operating performance was in line with expectations. They, however, maintain a neutral call on the stock, given they believe that the container growth is likely to taper off. So for today, expect maybe a tad bit of green take on the stock, but not too much.
All right, a tad bit of green take on that, but let's shift focus to some earnings previews. Then from the banking space, we have Punjab National Bank in focus ahead of its first quarter numbers. Abhishek is here with the key expectations. Abhishek, what are the key things to watch and anything on the Nirav Modi scam, any provision recognition or something of that sort?
Good morning, Mangalam. So, Nirav Modi scam-related provisions will be there in this quarter. All eyes will be on the asset quality of the bank. Now, slippages in the previous quarter were at 31,000 crore. Analysts on street are working with a number of 4,000 crore. Anything above that will be negative. Anything below that will be positive. Now, bank has also guided for a 7,000 crore of recovery. So, how that pans out will be seen closely. If you take into account the slippages that the analysts are working and the recovery that is there, gross NPA might decline quarter on quarter, and that may be positive. So asset quality movement will be seen closely as gross NPA in the previous quarter was at 18.4%. However, provisions will remain elevated. The bank has to provide about 10,000 crore plus over the next 3 to 4 quarters, out of which 7,200 crore is related to Nirav Modi scam alone, and also the fact that there is aging of NPS and mark-to-market losses. So the provisions will remain elevated. Domestic loan growth in double digit will be positive, like we have seen with other PSU banks. If it is in double digit, it will be very positive. Our poll suggests an NII to be down by 7.3%, while net loss of 1,652 crores versus a net profit of 343 crores. But remember, last quarter the net loss was much more than 13,400 crores. So there's a sharp decline in the net loss. Back to you.
Okay, Abhishek, thank you so much for that. But from the auto space, M&M, TVS Motors, as well as auto ancillary, Motherson Sumi will report their Q1 numbers today. Sonia is here with the key expectations. Sonia, good morning. Looks like a busy day for you. Let's start with M&M first.
Yes, it's going to be a busy day. In fact, lots of numbers coming in from the auto space. I'll start with M&M because that stock has been at a record high. It's up almost 25% in 2018, and that is because of the strong performance that it has had over the last few quarters. This quarter will be no different. The volume growth has been very good for M&M, and that will lead to a revenue growth of almost 20% for M&M plus MVML. Now, the EBITDA growth is also expected to be about 30% or so. This time around, the volume growth has come in at 19%, and that is led by an 18% growth in the tractor segment and about 17% growth in the utility vehicle segment. Now, the big talking point this time is the LCV space, which has grown for the entire sector. It's been the fastest growing segment for M&M as well, and that will lead to the profitability for them within the auto segment. The margins will expand both year-on-year and quarter-on-quarter. Remember, in Q4, the auto sector margins rose to 10% versus an average of around 7.5% to 8.5% for the last 4 quarters. So if they hold on to that double-digit 10% margin mark in the auto space, that's something that the street will definitely like. They've taken price hikes to pass on raw material costs, and the higher share of tractors and LCVs will make sure that the margins rise both quarter-on-quarter as well as year-on-year. So it looks like it's going to be a good quarter for M&M.
All right, Sonia, the expectations from TVS Motors, especially given the stock has underperformed?
Well, yes, the stock is down almost 35% in 2018. The fall was accelerated after Q4's numbers were quite disappointing. If you remember, the management for the first time did not give any guidance as to when they'll reach that double-digit margin forecast that they had earlier. And the margins as well were under pressure because of higher marketing expenses, etc. Now, this quarter, it'll be slightly different because, you know, there's a very low base effect that will come into play for TVS Motors, and on account of that the numbers will look very strong. Now, same quarter last year the margins were impacted because of a one-time GST compensation of around 17 odd crores and about 6 crores of discounts related to the BS3 inventory. Not just that, they also, you know, had some higher costs as well, which impacted them same time last year. On account of that, the numbers will look very good year on year. Expect a 26% growth on the revenue front. The EBITDA will go up 50% because of the low base. The profits will go up by almost about 31% odd. But what's important to see is whether this margin level holds on to 7.5% to 8% mark. Remember, if you look at the trend for them in terms of margins, last quarter, in fact, for the last 2 quarters, they've been unable to hold above that 8% mark, and that's something that the street has not liked. Last quarter, they hit 7%, and that's when the stock started to fall. So if they hold above 8%, then that's something that the street will definitely like. Export volumes have been very strong this time for the entire sector, so up about 52% odd. It'll be export-driven, really, the kind of growth that they've seen in terms of volumes. Higher share of motorcycles and three-wheelers is what they've seen this time. The rupee has depreciated against the dollar, and that will aid their export margins as well.
Okay, Sonia, so that was about TVS Motors. We will keep an eye out on the margin figure, but what are you expecting from Motherson Sumi this time?
Well, it will be a strong quarter for Motherson Sumi as well. The consolidated revenues will grow by about 21% odd. All 3 verticals have done well this time, whether it's standalone, the PKC or the SMP division. But the standalone growth is something that really stands out this quarter. So if you look at the standalone domestic business for them, it's grown by almost 21% on a year-on-year basis. There have been some forex gains for them, because of which the European revenues will also look very good. So the euro has appreciated 13% versus the INR on a year-on-year basis, and that will help in their overseas subsidiaries look pretty good. We're expecting about 11% growth in the euro revenues of the SMR PBV, which is the consolidated SMP SMR business. 11% growth is what we're expecting over there, and overall as well the profits will grow by almost about 40% odd. So a decent, good, stable quarter for Motherson Sumi, led primarily by the growth that we've seen in the domestic business.
All right, Sonia, thanks a lot for that. We'll let you and our viewers take a short break as well. Come back, we talk about more earnings and previews and reviews on the other side. Keep it with Power Breakfast.
Well, we are in the thick of the earnings season and a lot of earnings lined up. So let's start with the tech pack now. Emphasis will also be reporting numbers today. Rima is here with the street expectations. Rima, good morning. Over to you.
Thanks so much for that, Anisha. Well, along with numbers, Emphasis board will also be considering a buyback. So those are details that the street will eagerly await. On to the numbers then, a rupee revenue growth of about 4.5% on a sequential basis. Margins lower by 60 basis points to 16.2%. However, profit could be on the upside by nearly 7.5%. Now, Emphasis has actually been reporting an improvement in its performance. So F518, the company ended with a dollar revenue growth of more than about 10%, which follows after 5 consecutive years of a revenue decline. They also saw very strong deal wins. So deal wins in last year went up by nearly 48% on a year-on-year basis to $551 million. So this gives you a sense about the kind of momentum as well as the revenue visibility that Emphasis has. So on the back of that, we are expecting a fairly good quarter. So the company divides its business. So they have a direct international. The key over there is direct core, where the company has been guiding for above industry growth rates. The other set of business, which is about 26%, is their DXC channel, and that is expected to see at or above industry growth rates. Last time around, the company also upped its margin guidance for the full year. So they upped it to 15 to 17% versus 14 to 16%. But now with the rupee tailwind, would the company look to up it? Will be closely watched. Back to you.
All right, Rima, thanks a lot for that. Let's shift focus to the big international corporate development that took place yesterday. After leading PepsiCo for 12 years, the company's first female CEO, Indira Nooyi, is stepping down. The India-born Nooyi, who has been the CEO of the company since 2006, has been with PepsiCo for over 24 years. Now she will make way for Raman Laguarta, who will take charge effective the 3rd of October. Nooyi shall, however, continue as the chairman on the PepsiCo board till 2019. In a statement released by PepsiCo, Nooyi said, and I quote, "Growing up in India, I never imagined I'd have the opportunity to lead such an extraordinary company, guided by our philosophy of performance with purpose, delivering sustained performance while making more nutritious products, limiting our environmental footprint and lifting up all the communities we serve. We've made a more meaningful impact in people's lives than I've ever dreamed possible." End quote.
Okay, CNBC TV18's award-winning series What's Ailing Rural India is back. And this week we put the spotlight on the agri-distress in Maharashtra. After an initial spell of good rains, monsoon progression in the state has slowed in the last 10 days, particularly in the drought-prone area of Marathwada region. Dependent entirely on the monsoons for agriculture, this lull period is bad news for farmers in this region. CNBC TV18's Archana Shukla travelled to Aurangabad district to find out more.
Just midway through the monsoon cycle, farmers in Aurangabad have already lost hope of a crop this season. Farms like these are dry. These are patches in rural Maharashtra, in Marathwada, that have this year also not received enough rain. People around here, farmers, say that it's just 25% rainfall that they've received this year. यहाँ पर भी जमीन क्या है, नीचे से ऐसे सूखी है क्या?
हाँ, सूखी निकल जाएंगे। 3 इंच से 3 इंच से नीचे नहीं है मैडम। ये देखो मैडम, ये टोटल ये बीज खराब हो गया।
अच्छा, ये बीज डाला गया था?
ये बीज डाला गया। ये जो मिट्टी जो है, ये 2 इंच तक गीले है, लेकिन 2 इंच के बाद
नीचे पूरी सूखी है।
इसको कम से कम 8 इंच 10 इंच तक गिल्ली इस समय चाहिए थी, तो फसल अच्छी होती, लेकिन ये अभी कुछ फायदे के नहीं है, ये टोटल लॉस में जाएगा। ये इसका साइज बढ़ने का चाहिए था, कम से कम 3 फुट या 4 फुट चाहिए था, अभी भी ये 6 इंच के ऊपर ही है। अभी बारिश भी आया तो भी ये नहीं आएगा।
पिछले साल जुलाई मंथ में कम से कम 118 mm बारिश हो गई थी, लेकिन ये साल तो 50 mm में बारिश नहीं।
पिछले साल भी कपास किया था, तो हमारे इधर में कपास में वो बोंडाले उसमें आले आया था, उसमें बाद में हमारा पूरा जो आधा क्रॉप रहता जो बाद में निकलता वो पूरा खराब हो गया था। ये साल में जो खर्चा किया था वो अभी पूरा लॉस हो गए।
तो अभी काम कैसे चला रहे हैं? कुछ काम दूसरा कर रहे हैं? क्या कर रहे हैं?
म्हातारे दुसऱ्या गावाला जाऊ राहिले 15 सापू।
दूसरे गांव जाते हैं?
गावाला जातोय।
कितनी दूर?
25 किलोमीटर।
सरकार से आपको अभी क्या चाहिए?
आम्ही एवढं काम करतो ते काय घराला पुरत नाही म्हातारा पचाला काम होईना काय होईना आज हाताला कोकडं आलं तरी आम्ही लई खुरपत आता आम्हाला बोंडाळायचं काही आलं नाही कर्ज थोडं थोडं काढ 10-11 त्याचं माफ झालं नाही आम्हाला दर साल तिचं येत भरावं लागत.
District administration is now attempting to divert water from a neighboring canal to some areas. However, only 12 to 15 villages near the canal in Vaijapur can get some relief.
All right, interesting series there, What's Ailing Rural India. With that, we'll slip to a short break, come back, we get you a check on the cues to watch from the futures and options space.